And good morning, everybody, and welcome to the pre-market rundown for TriggerCharts. Today, it's June 19th, 2020. We had a lot to talk about today because markets obviously over the last 2 weeks have been pretty wild. I mean, from the downslope we saw of that sell-off back last Thursday to the rebound on Monday, following through and kind of tapering off a little bit throughout the week, bouncing up and down. We're finishing the week right now with futures up about 350 points on the Dow, and we're seeing about a 1.5% move or 1% move, 1.2% move on all the other indices. You know, you could do this, by the way, on TradeStation. You could put this as a trading window on the top. Well, not trading window, but I guess it's a view of these, so you can keep these live all day to see what's going on just right in front. So this is something that you can actually put within your workspace. So you can take a look at this and obviously move that up and down, pin it, or let it float. Before we get any further, I want to mention this for educational purposes only. It's not a recommendation to buy or sell any security at all. And it is simply ways in which you can utilize the indicators to, in my opinion, profit pretty well. And in fact, I want to thank everybody who has sent in all of those wonderful emails over the last couple of weeks. It has been really humbling and incredible, all the people that have said such kind things about the indicators. Number one, how easy it is. Number two, and probably most importantly, how much money they've made. And number three, how much losses they escaped from. In other words, the ability to not only make money, but save from taking big losses. That's one of the big things that we did when we set out to program and to code and come up with these various algorithms and trading indicators, was to make sure that while there may be some false readings, the levels of entry and indications of where you should be positioning yourselves, the fact is that we want to also make sure there was some quick outs, that if in fact things turned that weren't expected, that you would be able to get out of the way pretty quickly. I wanted to kind of put a quick poll. We did this not too long ago, and I want to get just a feeling again from this crowd of what you are doing. So I'm going to put a little poll up, and that's all about what time frames are you using. Just curious to see if you're utilizing short-term or medium term on the intradays or longer term. And we here, when we talk on Fridays, I usually go with the daily bars, not because I prefer them. It's only because it's just for education. Any of the charts look the same. You can look at whether it's a 10-minute or a 20-minute, 30-minute, 60-minute, whatever it is. Same thing as daily or weekly. It's the same concepts, just transpose them onto the shorter-term time frames. So I'm going to give that a minute to percolate right now and get into some of the discussion that we're going to have here. So what's going on? Well, the buy the dip mentality is definitely in play. And you can see that by looking at some of the bars and the long candles, the long tails that we've seen over the last couple of weeks. And on a daily basis or an intraday basis, more importantly, you can see that each time we see a bit of a drop, someone's there to pick it up. And whatever your feeling is about the markets, about valuation, fact of the matter is there is an absolute buy mentality out there. People think that stocks really have nowhere to go but higher from here, regardless of all the things that they're seeing inside the fundamentals of stocks themselves, as well as the backdrop of the economic circumstance that we're seeing right now, with the jobless rate as high as it is, with factory conditions very poor, with the potential for a long recessionary style situation going on, even though we're going to see a bit of a V-tick on the upside right now because we're coming from such a low base. We saw that last week, right? Or this week, this week, with retail sales. Retail sales were up over 17% on a month-over-month basis. That is the single best monthly reading that we have ever seen. And that makes a lot of sense. If we have numbers that are basically at a full stop, any kind of move to the upside is pretty good. But realize it's off of a very low base. And I always talk about the fact that if we have a 100% level, which is the number, if we take 100 and we drop 50%, we're down to 50. We need 100% to get back up all the way. So if we did have 100% or 100 level, get down to 50 because of the sell-off, and then now we have a 20% uptick, that's only $10 to the upside. We're still at a 40% overall drop in whether it's the indicator. That's not the exact numbers on the retail sales numbers, but it's pretty close. We're still about 30% lower than we have been at the peak. Meanwhile, it seems that there is this continuation of buy the dip at any cost because people are thinking, number one, we got to get back. I mean, look at the prices and where they were, and they're using that as a benchmark of where we should be going to. We were up here already. I've heard from a lot of people the concept of, hey, look at the cruise lines. Look at that level of Norwegian or Carnival, and look at where we are now. They're eventually going to get back up to there, and look at that big distance. Now, stocks don't owe anything to anybody, so they don't have to get back to that level anytime soon. It could take years and years and years, or never. Or in fact, the other case is possible as well, that some of these companies won't ever get back not only to their highs, but could in fact go bankrupt. Now, there could be some mergers and acquisitions. There could be some restructuring done of some other way before that. But the truth of the matter is that there is no one reason why stocks have to get back to the all-time highs, and they don't owe anybody those levels. What we have to do is work on the strategy, the structure, looking at the technical indicators as well as some of the backdrop. There's this push and pull going on with the markets. We see that, we start the day higher, comes in pretty hard, maybe bounces back up, or we start well on the lows like we did yesterday. The markets were about, I think the Dow Jones was down 270 points at one point yesterday, flew all the way higher, finished down a bit, but nonetheless, there is this push and pull going on with the buyers that are saying, hey, you know what? I want to buy the dips. And the sellers saying, you know what? I want to buy the rips. So we have this dichotomy in the market and this, I would call delicate balance in a way in the markets right now. And this balance is going to resolve itself one way or the other moving forward. Right now, we are still in the middle. If you look at the chart on the right here, you'll see that, and I'll kind of spotlight this so you can see it. On the right, this chart, we see this big drop last Thursday, right? That giant gap, which kind of reminds me of what we saw over here in March. This big gap lower, and then we saw the drop down, and then this big move higher, and then another drop. Big question is, we're seeing that play out right now, aren't we? We're seeing this big gap on the downside that kind of filled that gap that happened back at the end of May. We saw the move lower. Now we're seeing it move a bit higher, and then maybe potentially stalling out at about that, I would say, close to about the 317 range or so. Before we go on, let's just make sure everybody voted. Let's see how many people voted in the poll. That's pretty much everybody. So let's end this polling. Let me tell you what the numbers are so you know what's going on and what everybody that is on this webinar today is doing in terms of trading. What time frame do you prefer? Under 10 minutes, let me just look at this for a second. Yes, under 10 minutes is 38%. I'm going to talk to you about that in a second. 15-minute bars are 19%, 30-minute bars 14%. Nobody's trading 240-minute bars, which leads me to believe that nobody's really trading currencies, because that's the bar that a lot of currency traders like to use. 60 minutes, 10%, and daily bars, 19%. So what I want to mention to you about this under 10-minute bars is you have to realize that the price movement on an under 10-minute bar can be questionable. When it comes to the things that we're doing, because we're pushing inside of all of our indicators, the idea of volume at price. You want to have a good representation of the actual volume and the players that are buying at every single price range to provide us with a culmination of that bar reading. That's why we prefer a 30-minute bar. We think that there's a lot of information that gets in there. The more information that gets pushed into that calculation, the higher confidence we can have on that. So if you're using 10-minute bars, let me just invite you for a moment to think about using the 30-minute bars, maybe in conjunction with it. Now, you may say, well, 30-minute bars I don't know, the range is pretty wide. Well, you know what? What you can do is start out just lowering down your overall positioning inside of that. But think about using that because your accuracy, which is really important here, your accuracy may be that much better if you have more data and a higher confirmation and a confidence level inside of any particular bar. When we're looking at, let's say, a 1-minute bar, I don't know what you can glean off of that. I really don't. And the ability to chop trade, maybe you want to try to get a quarter on a 25 cents on a futures trade, or you're trying to get 10 cents on a trade. I mean, we're looking for breakouts, breakups, and breakdowns, right? We're looking to move away from the consolidation zone. But anyway, let's continue on really quickly so we can get a lot in today. Bulls are only seeing a light at the end of the tunnel. Bears are seeing a situation and trying to project out that, you know what, look at what's going on here. It's really worse than it is. We have an uptick in the COVID-19 cases in Florida, South Carolina, Arizona, California, Texas, oh my, what's going to happen here? You know, at the same time, we're seeing that most of the governors and any politicians saying, absolutely, we will not be shutting down the economies again, which I think is kind of reckless, but nonetheless. Unemployment, we saw initial claims, well, not getting much better. In fact, we dropped down last week a bit. Who knows how the numbers are going to come out next month when we see in July what the actual unemployment rate is, as well as the weekly or the monthly numbers of people that are back on the job. There's going to be some calculation differentials because of the errors that were made in the last one that may end up making things look a lot worse. It's questionable how that's going to work. It's clearly going to be a long time. We all know this until unemployment gets back to normal levels. Good news versus bad news. I talked about the COVID uptick. We talked about a little bit better economics like retail sales. We have the earnings outlook right now, which we don't really know. That's kind of a questionable. And that's the good news, though, that people are thinking that it does justify the move on the stock market and the levels in the stock market. I mean, who could complain entering into the worst recessionary periods or being involved in currently the worst recessionary periods we've seen since, I don't know, forever? How stocks are doing so well. We talked about TINA, T-I-N-A, which is there is no alternative. None. Nothing out there that we can look at as an alternative right now. So there's something that you want to take a look at. So volume is drying up. Last few days, volume has been atrocious. You would think that under that circumstance, the bulls will really try to attack and get things moving, try to squeeze some of the shorts to the upside. We've seen also a lot of speculative trading going on over the last couple of weeks, where we've seen that there are a lot of names out there that don't deserve to be up 300, 400, 500% in a day, only to fall down very significantly the next couple of days. So there is this lack of volume. There is this incredible amount of stimulus in the markets and liquidity and speculation. And I don't have to go any further. You've seen some of the people that are talking about stocks just only go up. You know, this is going to be a recipe for a major disaster in the future for those people. You have to see what happens. On the economic front, leading indicators are up 0.28%. 2.8%, 2.8%, we'll get that right. Retail sales up very nicely. Economics next week, we have existing home sales. A little bit of a disappointment this week with the pending home sales, even though we saw that mortgage rates are some of the lowest we've ever seen. Durable goods, we'll see the third revision of GDP. Initial claims, PCE prices, which is personal consumption expenditures, the Fed's favorite overall indication of inflation. And then personal income and spending. We're going to get to your stocks. I'm going to mention here a couple of things. First of all, there is an advanced coaching session. Anybody that signs up for a subscription, a paying subscription to the Commander Series, will get a 4-hour coaching session that is online. It's an evergreen series that we put up that is available to you. We'll send you over all the information on how to access it and watch it. It's a pretty good overall training program for technical analysis, and it is usually $199, but it is yours free today if you do sign up. Just send us an email to support@TriggerCharts.com when you do get a subscription and when you do subscribe, and we'll give you all the keys to get into that. Movers this week, we're going to watch GNUS, UONE, Workhorse, IPOC. There's a lot of SPACs and a lot of crazy names that are making some moves. Also, I'm going to mention in the chat, do me a favor, put your questions about what stocks you want me to look at. I saw that somebody had something about Eric. Got a couple of things going on from some other people, so we'll take a look at that. Let's kind of move over a couple of things. I'm going to look over here for a second here, waiting for data. I'm not sure what's going on there. Interesting, we're seeing, let's see if we can refresh this. Yeah, seeing the Spearman indicator pop down pretty low. I don't know why this is not waiting for data. Interesting. Let's look at the KRI. This is the one that really made us very concerned about the markets. Remember when we saw that major move up right here to the +7 range? That was a spooky time. We said the market's going to roll here a little bit, and they did. Right now, markets are in equilibrium. This is another indicator we have over on the TradeStation Trading App Store. Let's get to here. All right. We can already see some of the names that I'm putting up here are having some crazy moves, but I really want to share a few things with you. This is a really good look at a couple of charts that we have been, well, some of the things that we're seeing in the markets right now. Look at this. We've seen a lot of announcements about this, a lot of PR coming out. This is like it seems to me, a pump and dump, talking about Warren Buffett in a cartoon educating children. Now Arnold Schwarzenegger's coming in with some kind of other series. I'm not buying all this, to be honest with you. Something smells and feels a little fishy about this, especially the stock price. I mean, we go from a stock price down at 34 cents up to 11. It's got to get your head scratching a little bit in that short period of time. Yes, there was money to be made, and I want to show you this, and I'm going to actually break this down on a little bit of a longer term chart. Let's just do this on a 60-minute for a second here, because I think 60-minute, this is a trading stock, and while we could look at it on daily, which I don't think is a problem, I just want to look at this. I mean, there was a great indication. Let's go back here, 2 of them, and I'll circle them, and I want you to see this. So when we look at this chart, you can see that there was some major breakouts going on. There was some green that happened here. You got in at, I don't know, what price is this? This is $1.50, moved out at 270, 274, somewhere right around there. So we'll kind of keep on circling some of these levels. Another indication to move in, this stock at about 279, and up to the top at about 11. Got you out somewhere about 8. That was a beautiful trade. Bumpiness all along, a little bit of a short here. And it got out. This is almost a perfect trading pattern. This one was a little weird right here where we kind of gapped up, and you got to watch those gap ups. And then you got another move to the upside here at about $4, out at about $4.60 for about a 15%. A little bit of questionable moves right here down the bottom. A short call at about $4.34, down, covered you up at about $3. Another short call at about $3.11, and currently trading, what is it trading at? About $3.01 right now. Now, one of the other things I want to look at is what is going on the bottom of the screen. We look at the bottom of the screen, we see the aileron really kind of not strong. I mean, we saw this big uptick here. This is not a stock I would personally trade, by the way. It is way too aggressive, too risky. I think this, like I said, it does have all the feelings of a pump and dump. But if you want to trade it, that's fine. There's a lot of people making a lot of money with these kind of trading processes right now, whether it's on a 60-minute, 30-minute, even a 10-minute, you can take this down and probably see some. But I would venture to say that on a 10-minute, you're not going to see as much. And there's some good numbers, down at, it was confirmation of a trade about 388, pulled you out about 312 on the short side if you want to play the short. This is the 10-minute, pretty much the same bars we just saw on the short side on the longer term. I just think that on these especially, going down to a 30-minute gives you a little bit more of a better reading to look at. 60-minute possibly, you can get a much better kind of look at this. I just don't, all these gaps, these kind of things make me nervous. Not something that we like to look at very often. This is an interesting stock, Workhorse. It's an electric vehicle and to do a few other things for a variety of different industries. A big order came through yesterday. I mean, look at this stock on a daily basis. This is why I like daily, especially for swing trading, right? You get these really good, nice moves through areas. And what we looked at here, I'm going to put on the radar right now. Yep, that's what I thought. Look at the moves that we saw right here. What I do is I always look where? I look left, right? I've trained you for a long time about looking left. And you got to look left. And when we're looking left, there is a level here. And let's bring up a quick arrow. When I look from right to left, I can see that in this range, there's really nothing going on this. Look at right here, right? There's nothing here. Right? There's a blank area on the radar, meaning there's a hole, there's a fast zone, and stock prices oftentimes move quickly on a vertical basis and consolidate horizontally on a slow basis. So we're looking for fast trading zones, and we see this very clearly. So when you got the signal, let's clean up this chart a little bit. We got the signal, and we're looking at the bounce on this level right here, and then you saw it continue up. Well, it looked like it broke through that gap, and then we got a new altimeter, and then we got another breakout. And then you saw this kind of come down and consolidate, but couldn't get below that, let's call it the 260 level, and then it took off from 260 up to $4.50, $5. Right now trading at $5.25. So interesting. I looked at this yesterday, this stock, and I was kind of like, well, to be honest with you, it's already looks like it's gotten too high. I said we could look at this. I think that you're going to probably see it get to about maybe right there, about $5.25. Well, there you go. currently trading about 5.25. That's a nice move, don't get me wrong, but then I saw this big gap area when I looked from right to left, and I said, how much more can we get out of this? How much more can we squeeze out of a name like this that really is trading towards, I think, all-time highs? Let's take a look. Now, all-time highs were 11. I see, maybe got some more movement. I mean, you do have to see it get above about, well, you're there. 480, 490, move back up to about 642. Interesting play right now on this stock, on the Workhorse. The Workhorse hopefully turns into being a workhorse. Another stock that gives us just a real pause when it comes to looking at charts. This is one of the things that's happening. This is Urbanone. I believe this is a, what are they calling it? They're calling it African-American Black Radio, something of that nature, where I believe that's what this is. I got to look this up, but I think that's what this stock does. There's a lot of play in that whole area right now, and the opportunity to really get, whether it's advertising or whether it is enhancement of money, the opportunity to expand. We're seeing that, and obviously you're seeing that from a $2 to a $40. That doesn't make much sense. I don't think it's going to be that good in terms of the potential, like overnight. It may take a while to get there, but they're predicting that there's going to be something. I mean, we're talking about, what, 4 days? Right now trading up another 48% at 37 and change, which is way up here. Nosebleed area. If this stock did nothing forever, it was in the $2 range forever. This is a thematic play. We've seen this. The same thing about the COVID plays, the same thing as the protest plays, the stay-at-home plays, the technology craze, the work-from-home craze. All this is happening very, very quickly. Something to look at. A couple of people asked me about things here. I have some other stocks to look at. Boeing. Boeing's up 2.5% today at 197. So Boeing, when I look at this, let's kind of look at Boeing. I mean, you got a big drop area looking from right to left. Really, I mean, you do need to get over this, 235 level, which is going to take a bit to really work off. 219 level. Yeah, 198. You really have to break the 200 to start getting some momentum, because look at this shape of this. We got this B right here, right? I just moved that. We got this B. You see that? I'll draw that if we have to give a better look. That's not the right drawing tool. I got to get a squiggly tool. So we got this B. B. Usually B means that there's no resistance really in the middle, and that kind of correlates to over on this side here where we saw nothing all the way up, to these levels here. But when I look at this and I see, where are we going with this? And I think it's a very good question. Again, you have to really get above here. There's some resistance right in that zone. Once you get above that, and I think that you can look at this and say that, we have above 240. I mean, clearly it's a long way from now. That's 20% from where we are. There seems to be some clearing move, especially a gap up to, again, about $280 or so, something like that right now. So I think when you look at where this opportunity is and where you have the opportunity in Boeing, I think it's still a wait and see. If you want to start nibbling in, I think there probably is going to be some support right here at the 192 level, somewhere right around there. It does seem to be playing out. And let's look at this here. If I can pull this up. There we go. Yeah, about 192, there's some level there. So right now, again, trading what? At 197. So it's still in this little range of that. The other one that somebody asked me about was TLT. Okay, this is from Jack. He asked about TLT. Let's take away our drawings here. And let's move this out. I want to take TLT a little bit further out. I want to take this out on a weekly basis. I think it's important to look at this a little bit longer term, because this is a bond fund. It's a long-term 20-year plus treasury bond fund, so it's going to react significantly to rates and what's going on in the rate universe. So where are we with this? What's the question? Please call up TriggerChart for TLT. Explain when to buy and sell. I mean, right now it looks like it's in a buy mode. Let's kind of take this down, and you can see that we're starting to see a little bit of a change in momentum here on the aileron. Let's look at this on a daily basis. So on a daily basis, this looks a little bit different. We have a lot of resistance here at 163. I would wait to get above that point before I entered into a positioning of this again. If we do see the markets that come back, you're probably going to see a lot of selling of the bonds, rotating from what people have as a safety play into the more aggressive status. We've seen some of that. Listen, we saw that once things looked like there was a reopening, look what happened to the pricing here. So you really want this for a safety trade. And I think that, you saw that back in March where we saw that skyrocket of bonds where everybody was getting out of stocks and into bonds. And then we saw the drop down when everybody realized that, well, maybe the Fed's going to come in pretty strong. And they did. You know, we saw that sell off. So the Fed is there buying. So that's a good thing. And actually, this should have been, yeah, this is the sell-off right here. Then it moved up when the Fed, here's the Fed range right here after the fact. So the concern, the nervousness over here, the reality of the sell-off that everybody sold everything. And then on top of that, we had the move to the upside. So I think that when you look at this right now, you're in a major consolidation. Just you could look at this by just simply drawing a box. And we could take it probably from this level here. And let's, right to there. There's a consolidation zone. Back to where before we dropped off, where things got normalized, inside of the range. Probably say the radar will show us that we have the same thing going on here. There's nothing. So we're going to be kind of bouncing around back and forth in this zone here. We got support right about here at the 156. We look at the high volume node, the yellow from the radar. So, I mean, that shows us where we are with that, right? So I think TLT, that's an interesting one, but it's something you have to watch to really get over the next top. And again, it's the people have been rotating in and out. Somebody asked about ROKU. ROKU, the question was, I have some June ROKU 130s, thinking it finds resistance at about 138, wondering if you agree. So where's that? 135. So you got the Junes. The Junes are coming up pretty soon here. You got the 130s. I mean, today, oh, you have July. Sorry, I read that wrong. Because today is quadruple witching. July. I think you have some resistance there. The whole thing is the play at home type of thing. I mean, I think that probably in, I would say right about, 130 is resistance, maybe 131, give or take a couple bucks. We got short here a little bit, maybe a little bit prematurely, to be honest with you, for our clients. Right about here, 120, maybe 123, 124. Let's turn that off. Put the speaker on. And then you got this move to the upside that probably is going to, I would agree, 130s. Yes, I think you are right about that. Gold and silver. Somebody asked me about BABA. A lot of questions coming in today. Let's do this. And I want to go back to a couple of the other stocks here. Oh, I'll talk about BABA for a second. BABA is breaking out. I mean, it looks okay on a daily chart. There is the opportunity. Where is it now? Up about 226. So trading right here. I mean, you're going to probably see a little bit of resistance at the top end. Not much more there. You saw this really interesting pattern where you see a couple of bottoms and bottoms and bottoms, but you saw, of course, really importantly, a higher lows, right? So if you can just draw a trend line on that. We can take any kind of drawing tool. I'll take my drawing tool here. You kind of take this, right? You got that trend line, and I would say that somewhere over here. So you got kind of a trend line that's kind of starting to come in a little bit. And that channel, it's getting narrower. So once you get narrower, you start to look at that as the opportunity to see an upside move to where? Well, we can draw this line across here. Kind of correlates right to where we are on the top end from the previous high back in the early part of 2019 or late part of 2019. Yeah, nothing exciting here. Not that it's bad. I'm not saying that, but just nothing too exciting. Long-term hold. You like the stock? You like BABA? All right, have at it. Let's see what else we got here. You'll see a lot of, so somebody's asking me about triple witching. I think it's quadruple witching. I thought it was. You'll see a lot of volume. Volume has been terrible. Let's see if I have this on here. I think maybe I do. Look at this volume. There's another chart I look at, another a screen that I created. Let's look at the NASDAQ on the right-hand side here. So we're looking at the NASDAQ volume on the right. We're looking at the New York Stock Exchange. Look at terrible volume. Last few days pretty low, one of the lowest of the whole year. So we're going to see this volume spike like we saw back at the end of last month. We'll see this major volume spike. We'll see probably a lot of things going wonky, a lot of need to probably keep the S&P up above the 3,100 level. There'll be a lot of move there, possibly moving the NASDAQ up above 10,000, hoping that people can cash in on that, and then we'll see what happens from there. It does seem pretty amazing that stocks are so resilient right now with all the news we have, but it is, that's the kind of situation. We are seeing that the daily move, the move of stocks that are above their 200-day moving average. Okay, there's above and below. About 203 stocks in the S&P are above their 200-day moving average. About 295, 96 or below. So there you go on that. So we're seeing a big uptick on the open. Make sure to check out TriggerCharts.com for all the videos. The replay of this will be on there as well. Of course, TradeStation, which is the only place that we provide our particular indicators. Make sure to get on there. Check it out. Everything has a 10-day free look, a trial. So you can check that out. So there you go. With that, let me kind of click this off. We're going to end this right here, and I'm going to see you again next week. So thanks for joining me. Next Friday, we'll be here at 9 o'clock.